Hello and welcome to today's update. Today is 17th of November. You're looking at a daily chart of S&P 500. S&P 500 saw a volatile trading session, big gap down in the morning, and then recovered throughout the day. Still managed to finish with a loss of 12 points to close at 39.46. But it was well above the session lows. Now, in the daily picture, I've got this zone right here highlighted. S&P 500 spent a lot of time inside this zone, and then when the CPI was announced earlier this month, it broke through this level. And today, for the first time, we see that a test of this breakout level. So it had risen all the way to 4,000, above 4,000, and then in the last few days it pulled back, and today was a successful test of this 3,900, which is positive. So what we now want to see is it hold this level, and maybe in coming days make an attempt to take out this previous high, which is around 40.28. Now, the other thing you'll notice is that the daily moving, the 20 and 50 moving averages, they've started to cross right here. And these two will also provide dynamic support right now. They're roughly around 38.50 area. You can see that right here when the previous time when they crossed to the upside, and we saw that the price started to move higher. During this time, you'll also notice that I have these two green lines. This was the time when MACD had crossed above the zero line. And it was also when RSI was above the 50 level. This green horizontal line is the 50 level. Up until this green line, this is the line when MACD basically crossed and started moving lower. And eventually RSI fell below the 50 level. So when MACD was above the zero line and RSI was above 50 level, we saw price moved higher during the June rally. So we now see something similar happening. So I've got this vertical line right here. You can see MACD has crossed above the zero line at this point, and RSI is already above the 50 level. So, and you can see that MACD remains above the zero line. So as long as MACD remains above the zero line and moving higher, and RSI remains above the 50 level, then we should see positive price action. And so far that's been the case. So support is at the 3900 and then 3850. So long as S&P remains above those levels, the technical picture, this counter trend rally, I think can continue. You can see that it's been making series of higher lows, low right here, a low right here, low right here, and this could end up being a higher low. I mean, we don't know yet. It hasn't, it hasn't confirmed yet. So this could potentially be another higher low. Unless it breaks below, then this trend will change. On the other hand, you can see that it made a high right here and then another high. So the sequence of higher high and higher low is intact on a daily chart. So that means within in this counter trend rally, I'm still seeing higher highs and higher low, which is positive. And again, as I said, that's because the momentum indicators are now in positive territory. So that's S&P 500. If we look at NASDAQ quickly, so we see, so NASDAQ had traded inside this range for a while, and then it broke out of this range. Today it fell below, but then managed to close right at this level. This level is 11,681. Today NASDAQ 100 closed 11,676, just 5 points below. So if it's able to get back above, that means this would be a false break below, break into the inside this zone again. So what we want to do is see NASDAQ reclaim this level decisively, and that would be positive. Also notice that the moving averages are now beginning to turn to the upside. They haven't crossed yet. Today we see Nasdaq test the 50-day moving average and recovered. If I show you the futures, the Nasdaq futures, you can see this clearly. This is the Nasdaq futures. You can see that it touched the 50-day and then bounced. So I'll go back to the cash. So the moving averages are turning. They haven't crossed. So if they cross and start to move higher, that would be positive. MACD continues to move higher. It hasn't gone above the zero line completely. So it's heading, looks like it wants to go higher, but RSI remains above the 50 level. So RSI is above the 50. If MACD can make a clean move above the zero line, that would be positive. So zero line is right here. So that would be positive. So that would be something like, what we saw right here when MACD crossed above the zero line and continued to move higher, and RSI was above the 50 level, this green line, and we saw positive price action. So we could see something like this because we can see that the momentum indicators are improving. It's definitely positive in case of RSI and improving in case of MACD. So if it continues to move higher, that should be positive. So on a daily basis, it's not as bullish as S&P 500, but the technical picture is, not negative either, because they remain above the 20 and 50-day moving average, which should provide dynamic support. And then if it can rally and take out this previous high, which is around 12,025, that would be positive. That would establish another higher high. But nonetheless, we have a high here and then we have another high. So overall, the technical picture looks fine to me. This counter, so that tells me that this counter trend rally could last a little bit longer. If we look at Dow, just to see what's happening in Dow. So Dow, strong move up. It's now consolidating a little bit. It's well above the 200-day moving average, which is the black line, and you can see that the daily 20 and 50 moving averages crossed and they're moving higher. So this is looking, quite bullish. Dow could pull back or consolidate sideways because it's now, it's gone well above the moving averages. So I think Dow needs to kind of rest for a while so that the moving average can catch up with it. But overall, the technical picture looks quite positive. MACD remains well above the zero line. RSI is well above 50. So this technical picture looks positive to me. If we look at Russell 2000 next, so Russell 2000, it's still moving higher, making higher highs. It came and touched the moving average today. So these two moving averages are going to provide dynamic support. I see that there was a rejection at the 200-day moving average, but MACD remains above the zero line. RSI is still above the 50 level. So the overall technical picture looks fine. You can see higher highs and higher low. What we need to see is stay above these moving averages and then retest this high and eventually take them out. So that would be positive. So we'll see how things develop in coming days. But overall, I would say technical picture is not not bad at all. So if we look at HYG, which is the high yield bond, this too, you can see that it's gradually moving higher. Today it came close to the moving averages. So moving averages are now about to, they're curling up. They're about to cross. You can see MACD moving higher. It's now above the zero line. RSI is also above 50. So the technical picture is not bad. If MACD crosses like this way and starts to move lower, then obviously it would look bearish, but we don't see that happen yet. So we'll see how things play out. I should mention that it hasn't made a higher high. If you look at S&P 500, you can see S&P 500 made a higher high from this point to this point. HYG hasn't. So this would be one observation. So we want to see HYG make a higher swing high. That would confirm that maybe this rally. That would confirm that there is no divergence between the stock and the bond. So this is the bond market basically. We want to see that they are both in sync and moving higher. So that's the only thing that I'd be keeping an eye on, just to see whether or not it can make a new swing high. But if it were to fall below the moving averages, then the technical picture would start to turn negative. So we'll see how things develop in coming days. But at the moment, I would say it's okay. It's not the best looking chart, but it's not bad either. If we look at what's happening in the bond market, so let's look at the rate yields first. So we look at the futures. So this is the March Fed funds future. So it closed at 4.78. So the market is basically expecting Federal Reserve to increase interest rate to between 475 and 5. It traded as high as 515. So it has pulled back a little bit, but it still remains close to the 5%. So looks like market is expecting, Federal Reserve to increase rates to 5%. If I look at the April, so that's at 4.9, so that's close to 5%. If I look at the June, that's at 4.99. So that means definitely by middle of next year, market is expecting Federal Reserve to increase interest rate to 5%. If I look at September is slightly below, it's at 4.91. So definitely market is not looking not expecting Federal Reserve to increase interest rate above 5%. All the Fed funds futures are near 5, but just slightly below. I think the data next month's data that we get, the next month's the unemployment report and CPI will provide further clarity as to whether or not inflation is coming down or it's holding steady, and that will at that point I would expect the Fed funds futures to react. If we see inflation tick up, then these yields can go above 5%. But for the time being, they are at or slightly below 5%. If I look at the two-year was up almost 10 ticks today at 4.45. So it's moving up slightly. 10-year today was up almost 8 ticks. So that closed at 3.777. So you can see that it's coming down. So it's made a new low. So this is the 3.6. So previous low was around between 3.5 to 3.6. You can see the momentum indicators are weakening. So and it's started to make a lower high. Now the spread between the 2 and 10 is widening. So this is the spread between the 2 and 10, which is right now at around 69 basis points. That's a lot. You can see, it's going down basically means that the spread is widening. That's a lot. If I look at historically, zoom out, you can see that even here back in 2007, the spread wasn't that wide. You can see that even here it has the current spread between the 2 and 10. So market is definitely expecting a recession because the spread has started to widen. So we keep monitoring that, but at the moment market is definitely expecting a recession. That's why the 10-year yield is not it's kind of going down, whereas two-year is holding steady. If we look at dollar, so this is dollar, you can see that dollar had a big decline and it's now flagging. So you might say this is a bear flag kind of a pattern. So we've got resistance right here, which is around 107.7, and then we've got this resistance at this downtrend. So if there is any rally, I would expect some resistance at this trend line. You can see MACD is in oversold, RSI is in oversold territory. So there is an opportunity for a bounce right here. But because this is now broken, I would expect resistance to kick in at this level. If I just look at the weekly chart very quickly, you can see that weekly MACD has crossed. It's now moving lower, which means that the momentum is weakening. So which means that any rally is likely to be short-lived because it's starting to weaken. You can see weekly RSI is below 50 level. You can see from this point on right here up until now, RSI was above 50 level. And you can see the price continued to move higher. And MACD was also moving higher during that time. Now you see MACD is starting to come down and RSI has fallen below the 50 level. So the longer it stays below the 50 level, I would say that the momentum would remain weak. Any kind of rebound would be short-lived. So we'll keep watching dollar for now, but the trend has changed the longer term and it's now looking weaker. But I do see an opportunity for a oversold bounce. So we'll keep monitoring what happens to DXY. I want to look at oil. So oil is now looking weak right now. You can see that this level has been breached. This is a very important level. If it closes below this level tomorrow, we're going to see some weekly bearish chart. This is a weekly chart. You can see that the candle that's forming right now is below these two weekly lower wicks. So if it closes below, so this is 82. If it closes below 82 tomorrow, this would be a bearish looking weekly candle. So that's not looking positive. Even if I look at on a daily basis, you can see MACD is crossing below the zero line. That's not good. And then RSI remains below the 50 level. That's also shows that momentum remains weak in oil. So that suggests that we could see further weakness ahead. This was the previous low. So a test of this level is possible, which is 76. So overall looking weak. So we'll see tomorrow how the weekly candle ends up being. If it closes below 82, that would be bearish. If we look at let's look at this sectors, S&P 500 sectors, and see what's happening. So this is XLK, the largest sector in S&P 500. So you can see that it traded inside this zone for a long time and then broke out after the CPI. Today there was a successful test of this level and it held. So this is around 130. So today it closed at 131.94. So this was a successful test, which is positive. You can see the daily 20 and 50 moving averages. They were about to cross, and they should also provide dynamic support. So they're around 127.50, 127.70. So that should also act as support. You can see the MACD's crossed above the zero line. That's positive. RSI is above the 50 level. So I don't see anything wrong with this technical picture. You can see that higher highs and higher lows. So high right here, low here, higher low. So it looks like this counter trend rally can continue for a little while. I mean, it would be helpful if it just consolidated for some time and then moved higher and tackled this 200-day moving average. You can see in June what happened was, from this point it started rallying and it traveled a long distance in a short period of time and tried to tackle this 200-day moving average, and it failed. But this time what's happening is that it's not doing the same thing. It's gone up and then pull back. It's gone up and then pull back. So this is actually much more constructive, because if it tried to go from here and all the way to the 200-day moving average, there was a good chance that this would fail. but it's not doing that right now. It's going up, pullback. It's gone up, now it's pulling back towards. So if it goes up, starts to consolidate as it moves towards the 200-day moving average, I think it would have a good chance of taking out the 200-day moving average. So we'll see how things play out in coming days. We need to see that it's stay above these 200-day moving averages. If it closes below the 200-day moving average, then the technical picture will start to change. But so far, I would say it's positive. I'm not seeing anything negative with this technical picture. Next up is XLY, another growth sector, but this is not doing all that great. It's still stuck, unlike XLK, which traded inside this range for a while and then broke out. But this one is stuck inside this trading range in this box, so it hasn't been able to. Today it closed below the moving averages, so it's not looking all that great. So we need to see this move up, because this is an important sector. This is a growth sector, and we want to see the growth sector performing well. Look at the MACD, it remains weak, it remains below the zero line, and RSI today closed below 50, so that's not looking good. We need to see XLI move up, but at the moment the technical picture looks weak to me. XLF, another big sector in S&P 500. This is financial. You can see that the financials have been trading inside this zone for a while, and it had come back strong rally to move up to this level, which is the previous high right here. Now it's consolidating. It remains above the 200-day moving averages. You can see the 50 and 20 moving averages are moving higher. So it's doing the right thing right now, because it had a big run up, higher highs and higher lows. So it's now pulling back to the moving averages. And I think if it consolidates for a little bit longer and then makes an attempt to take out this, this zone, I think it might be successful. So overall, this is looking quite positive. Momentum indicators are also positive. MACD above the zero line, RSI above. So I think this is looking quite good, and I think this consolidation is healthy. So if it can, move higher and take out this level, that would be really, really positive. XLV, another big sector within S&P 500. So this is healthcare. Again, you can see it's been trading inside this range for a while. So it had a good run up, since the CPI lows. It's been making higher lows, low here, higher low, and then so far it's above this low. Now again, it found some resistance at this top of the range. Understandable, because we have a previous high sitting right there. But what this consolidation is doing is it's bringing it towards the moving average. You can see previously the 20-day moving average provided support. So as long as it stays above these moving averages, there's a cluster of moving averages, the 20, the 200, and the 50. I think overall, it is positive. One thing to keep an eye on is MACD. I can see that it looks like it's crossed. We'll see whether or not, whether it does something like this. After crossing, it went all the way down and then fell below the zero line. We don't want to see that. I mean, it can cross and then maybe go sideways, but remain above the zero line. So we'll see. So this would be is worth watching. But RSI remains above 50, so that's positive. So we'll see what happens to MACD here, whether this is a cross like this or whether it's just going sideways. But overall, price action looks quite positive to me. XLC, not a positive looking chart pattern, basically going sideways, hasn't been able to make a new swing high. But I do notice that MACD is gradually moving higher. It hasn't gone above the zero line. RSI still remains above 50. So this is positive. This is improving. Price action is neutral at best, because it's just going sideways. This is an important sector. This is a growth sector. We need to see growth sector moving higher. So we want to see, this sector has stocks like Meta and Google and Disney, and none of them are showing any positive momentum. at the moment, and that's why you can understand why this sector is basically doing nothing. But this is a growth sector, so we need to see growth participating, and that would be positive for S&P 500. If we look at the next one is XLB, so this is the material sector. So this is also looking positive, series of higher highs and higher low. Now it's consolidating, it's coming back towards the moving averages, which is good, because this big run up had taken it well above the moving averages. So you want to see it consolidate as the moving averages catch up with it. So overall it's looking positive. MACD remains above the zero line. RSI, it was overbought, it had gone all the way up to this level. This level is overbought, so it's now pulled back a little bit. So overall I would say it's positive. It's a small sector, but you want to see them doing well, but not very well, because this is a defensive sector. You want growth to be outperforming defensive. Industrials next. Again, I just move this channel. Again, similar to materials, strong move up, went way above the moving averages. Now this consolidation is bringing it towards the moving averages. So you can see the 200-day here and the daily 20 and 50. So this is also looking positive. It came and encountered resistance at the previous high right here. But if it can consolidate, go sideways for a while and let the moving averages kind of come up and touch them, I think that would be positive. So this is a defensive sector. So if defensive sectors go sideways a little bit and pass the baton to the growth sectors in S&P 500, that would have a much better look. I want to see the growth sectors doing better than the value sectors. At the moment, I'm not seeing that, but that may change. Utilities, okay, again, it's been moving higher. It's now testing the 20 and 50-day moving average. So this is a defensive sector. This can go sideways, which is not a problem. But it's also making a series of higher highs and higher low. So that's positive. If we look at XLP, this is Staples. Staples also is moving higher. It's making higher highs, higher lows. You can see the moving average is crossing. This is a defensive sector. So if it goes sideways for a little while, that's not a bad thing at all. Energy XLE, strong looking chart. It's now come up to the top of the previous high. So big run up right here from since end of September. It has a big run up. Now it's coming and testing the moving average right here, but overall this is looking quite positive. Again, this is a defensive sector. If it can go sideways for a little while, while the growth sectors can start to move up, that would be positive. XLRE, this is real estate. So this is a small sector. This is also gradually moving higher. So if it goes sideways for a little while, that's not a bad thing. I want to show the growth versus value. This is XLY versus XLP. You can see that the growth sectors have been underperforming. You can see this ratio has been coming down. It's come down to this level, which coincided with the local bottoms at that time. So you can see the last few days, growth has been underperforming value. This ratio is coming down again. So we want to see this, this ratio turn around and start to move higher, because during market bottoms, usually you see growth leading value. So at the moment we're not seeing that. So we need to see this ratio start to move higher, but we don't see that yet. So we'll keep an eye on this one to see whether or not there is a rotation out of value into growth. So just to summarize, S&P 500, So far so good. I'm seeing series of higher highs. This level 3900 is very important, and below this is the 20 and 50-day moving average. As long as these moving averages are not breached, I think overall picture would remain positive, because you can see higher highs and higher lows. So we'll see how things develop. Tomorrow is the end of the week. So we'll see. Let's have a quick look at the weekly chart candle just to see. So this weekly candle right now is more like a doji, undecided, following last week's big green candle. It's understandable if we have a indecision candle. So tomorrow is the last day. We'll see what happened to this candle. The other thing to note is tomorrow is option expiration. So market could be volatile because it's the monthly option expiration. So we'll see how the week ends, but it looks like it could be like a indecision type week at the moment based on what I'm seeing so far. Well, we'll leave it here. Thank you very much for watching the video, and I'll come back with another video over the weekend. Thank you.